Hey traders, happy Friday. Welcome to our November 20 pre-market show. I'm Raghee Horner, and thanks for joining me for our regular show. We're here Monday through Friday from 9 to 9:20 every morning. And so let's get to it. Casual Friday, Baby Yoda, new episode of Mandalorian drops today. So hope everyone's having a good week. And we have, of course, a holiday affected week next week. I might do the pre-market show anyway. I mean, we're not going to be trading, but that might be a really good couple of episodes for some Q&A. So, yeah, we might go and do that next week as well. Back in my Forex trading days, the markets were open on Thanksgiving. And so the only holidays of my about 20 years of Forex trading that I ever had were the New Year's Day and Christmas. Otherwise, Forex just really hardly sleeps. Okay, so let's get to it. Yes, Mandalorian fans out there, got the Baby Yoda. All right, gang. Have a hopefully you're having a great week. Good morning. Good morning. Good morning. Good to see you all. Okay, let's get to it, shall we? As always, whatever questions you might have, type them in. I'm going to bring you up to speed as to what it is that's been on my radar. So let's jump right into the chart. So on Fridays, what I'm typically looking to do is not overtrade, focus on the first half of the day. Oh, can you guys, I don't know, can you guys see my cat? I don't know if you guys can see my cat. Oh, there he is, making his pre-market show debut. All right. So I'm trying to avoid doing a lot of trading on a Friday because the end of something, the end of a week, is very different than the beginning of a week. So what we have is what in my mind, the way that I treat it is what I used to do when I was trading Forex. It's a half day Friday in many ways. Remember that at 11:30, as the U.S. markets are going into the midday doldrums, you have the European markets closing for the weekend. You already have the Asian markets at 4 a.m. this morning closing for the weekend. So it's really important to remember that the psychology of a Friday is really the end of something. And by noon, you really only have the U.S. markets opening without any anticipation for the next financial centers until Sunday evening. Also, there's the end of week psychology. So now a lot of traders are asking themselves, where am I on my P&L? Do I want to pay myself today? Maybe reduce my position size. The other conversation is, do I even want to take the risk of taking a position into the weekend versus Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday? So there's a very end of psychology. It's just the end of a trade. Do I really want to hold it into the weekend? Would I like to pay myself on a Friday? There is that psychology. So just remember, it's not a ramp up, it's a ramp down. Fridays are distinctly different than Mondays in that sense. So, I think anyone who's been trading a while and coming up on my 33rd year, you'll know that the end of the month, the end of a week, end of a quarter, end of the year, we're coming into year end, gang. Me and my partner here in the office yesterday, we were doing a little bit of Q&A talking about, what do I anticipate for the end of the year? And, it was a really interesting conversation that as she was asking me questions, and she's seen me trade for years and years and years now. And she said, what don't you want to trade into the end of the year? Where might you avoid? What are those things that people aren't talking about? What about end of the year? Well, one thing to think about is the window dressing. Everyone says it doesn't happen, but at the end of the year, what stocks will a money manager want to sort of pad his positions with? I know it never happens. That's not a real thing. Right. So, those kinds of conversations are ones that in many ways transcend or are apart from the vaccine and the COVID numbers and things like that. So, think a little bit more about the end of, because that's really where we are in terms of the year. All right. So with that being said, hey there, Larry. Larry says, I took your ultimate day trading strategy class. Very cool. And this venue complements it. I'm super pleased, Larry. You know what? Let's jump into some of what you're mentioning there. So again, keep in mind, gang, this is very old, tried and true psychology. Oh, bear with me one moment.
I figured I would.
This is very tried and true psychology, which is the end of the end of a week. Well, start more granular. End of a day, end of a week, end of a month, end of a quarter, end of the year. It's the end of psychology. Okay. All right. So with that being said, a few things. One, I've been maintaining since election Tuesday, when the choppy daily time frames finally got above some key volume weighted average prices. I've been saying, hey, gang, yes, we'll see pullbacks, but the higher probability play is to wait for exhaustive buys and stick to the long side. And that's exactly what we'll continue to do. And it looks like the markets are back on track. And, those of you that are in my Sector Secrets Mastery, we've been building positions based on the pullback, and it's never fun. I'll tell you, I know for a lot of folks, this is their first time using exhaustion and buying floors rather than sort of what I think is an easier psychology, but not necessarily a better trade, which is buying through resistance, buying when the market's moving higher. It feels better to do that. I don't think it's nearly as effective, but it feels better to do that. But when you're looking at pullbacks, you got to remember that we don't know where the market's necessarily going to stop. But when you're buying options on pullbacks like we've seen the last 3 days, I think today we're seeing a little bit of that resilience that I would anticipate. Interestingly enough, take a look at this Dow on the chart, stopping at that rolling 10-day. So there is a lot to be said, which is in the vicinity, by the way, of the 8 exponential moving average. So you have 2 reasons there, one volume, one price, for why the market would stop there. Remember that S&P, Dow, and Russell have all gone double green. That's the way that I use the 8, 13, 21, and 34 EMAs to gauge the structure, bullish, bearish, neutral of the market. NAS is rebounding, but NAS is the only one of the 4 that is still in that yellow sideways market behavior. So heads up on that. Be a little bit more selective about where within tech that you would want to play. SMH is a really good candidate, as would be, let's see what that XLY is up to. I like XLY. It's not quite double green there yet. XLC is double green. You can see how much better it looks in terms of structure compared to the index that this particular sector is a part of. Don't be afraid to get a little bit more granular. And I'm talking to you too, my futures traders. Yesterday, what was our biggest position? Well, we wanted to be long and long only. And our main trade was Microsoft long. It allows us to take advantage of QQQ, XLK, relative outperformance, nice buy off the floor. And here's the important thing, gang. If you're struggling with your intraday, one of the things that I taught in my day trading class is pick a side. I think it works in life, and I think it works in trading. If you're always waffling, imagine trying to get somewhere on vacation in your car. If you're getting off at every single exit, and then you're heading south and then north and south and north, you're going to go nowhere. And I see that a lot with day traders. They're two-way traders. As sort of anecdotally, but a lot of decades of experience, I will tell you, I can probably count on one hand traders that are good at that and can make a living being two-way traders. It's actually pretty rare. So if you're struggling with your day trades, you're thinking, gosh, some of these days I'm doing really well. Look back and see whether or not those might have been one-way, directional bias oriented trades. The probability right now, even the days that you'll lose, the probability of waking up and saying, I'm going to stick with the directional bias, I'm going to look at range lows, whether it's volatility driven, whether it's volume driven, I'm going to look at those range lows, and then I'm going to buy. And I'll wait till I get that opportunity to buy. Versus shorting highs, versus shorting momentum higher, I think you're going to find a much better probability, especially right now, because we've got that directional bias that's been in place since, again, Election Day Tuesday. All right. So that is that. And good morning. Good morning. Good to see everybody. Let's see. What's the mug today, Len? Today is the, so it's the double barrel pirate whiskey coffee mug. Yeah. We're rocking the pirate mug today. So so every now and then, um, this is from Death Wish Coffee, dumbest name, great coffee. They actually have a barrel. They put coffee beans and whiskey barrels. It has this nice whiskey taste. I don't like whiskey, but I like whiskey coffee. Go figure. So they have the pirate mug in honor of that. Took a break from the Jamaican today. All right, so let's get to it. Yeah. Oh, what's the cat's name? Yeah, that's the cat's monitor. Right, it's the cat station. You can see the four. That's the cat station. Yeah, he trades absolutely. What's his name? Minou, which is French for kitty. Yes, my mom named him. I don't think she even knew Minou was French for kitty. French friend of mine said, "Why did you name your cat after kitten or kitty in French?" I didn't know. Okay, so let's see. The idea behind relative outperformance is so much more important. Gang, Friday is a great time to downshift and look at your watch list building. Whatever you were trading this week may not be great for next week, and whatever you're trading this week may be even better next week. But unless you get down to a very granular look, this is the XLF, right? I wouldn't have thought the XLF is something that I'm going to be talking about next week. Take a look at the daily time frames. Schwab has been something I've been trading to the long side. BlackRock has been something I've been trading to the long side. But overall, XLF has been something that's been a yellow underlying market, and I've been very granular about the specific stocks, playing the boats instead of the tide. But now the tide's back on track, it looks like, for higher highs, benefiting from year-end sector rotation, perhaps. XLE. XLE hasn't gone yellow, but there's a number of stocks within the XLE that, here we go. Here's the XLE. Again, still yellow, but there's a number of stocks that are looking a little bit bullish. Chevron, Schlumberger, Marathon. Again, I wouldn't have touched this to the long side with a 10-foot pole. In fact, I've been shorting it most of the year. And again, the structure has changed. So make sure you are staying on top of those structural changes, that even though you've been trading a certain stock for the last week or for the last day, it may not have the structure that should put it at the top of your watch list. And I think we've got to be very discerning and willing to add things to our watch list, which I think most of us are very good at, but removing things from the watch list can sometimes be more of a challenge, especially if that stock or ETF, or whatever the symbol is, has been especially good to us. All right. As far as a little bit of day trading psychology today, I'm looking to the long side. I'm going to look for the same kind of fades I've been looking at all week long. And again, particular emphasis on the ES, YM, RTY, if I get the opportunity, if I can find relative outperforming individual stocks. Great. Like I said, most of our trades yesterday were day trading the Microsoft options. Let me talk for a moment about Microsoft options, because I know we're talking to groups here that, a group of traders here that are options traders, futures traders, maybe some of your Forex traders, maybe like ETFs. Whatever it is, we're trading lots of different markets. I trade lots of different markets. Even though, I spend most of my day in the futures room, and in my sector secrets mastery, I'm looking at day trading futures, and I'm looking at end of day trading options on ETFs and stocks. But yesterday we day traded Microsoft. To me, that's still very much in line with the futures markets, because think of Microsoft and how unique it is within the world of futures. It's a heavily weighted stock within the Dow, within the S&P, and within the NASDAQ. It's also heavily weighted within the XLK ETF. So it's a piece of the overall futures picture. Here's the other thing too. We traded $3.10 options, $3.10, not $30, right? It's a very inexpensive option. So it's easier to scale in. It's easier to scale out. It's affordable. Those are the kinds of options I like to take advantage of day trading wise. And by the way, that was next Friday's expiration, not this Friday's, because I don't need the time decay monster breathing down my neck. So you can day trade these options for very little capital, which is really important to me, because a lot of traders don't want to put on multi-leg more sophisticated day trading option strategies, I focus mostly on long calls and long puts. And so yesterday's day trade, we had some traders who were trading 2 Microsoft options. We had some that were trading 20, right? So when you have those inexpensive options in a stock tied to the broader futures markets, you've got a really synergistic kind of approach. And for those of you that were in my day trading class, like Larry, I know that's going to totally resonate with you. You're thinking, yeah, of course, it makes sense. Crack open the broader average, see what's inside, see what's a relative outperformer. All right. Okay. So, Samuk, I don't prioritize. So great question. Today is the 3rd Friday of the month. Today is a caution day. Whenever we have options expiration, I know a lot of people use this day for trading, for pins, and I don't like to do that. I don't like to do that at all. I think that there's a specific kind of volatility unique to options expiration Friday. It's a Friday, so I don't like it to begin with. It's my least active trading day of the month. And options expiration Friday just adds an extra amount of volatility, which is risk, gang. I don't do a lot of trading on options expiration. I think the setups are far better in the ramp up, in the pit bull low play Wednesday, Thursday, Friday of the 2nd week of the month going into the 3rd week. So while a lot of people are focused on Friday, I've made my money on the psychology that is very much concentrated on today. That's not to be braggadocious. That's really for everyone out there to sort of maybe shift their perspective and say, am I placing too much emphasis on trying to pin things on options expiration Friday and try to take advantage of volatility and things like that? Or am I missing the much easier, less expensive, less risky model paradigm of taking advantage of a pit bull low and the anticipation of what's going to happen into options expiration Friday? And that way I'm able to very naturally wind down my week, not ramp up my week on a day like today. I don't trade actively on a day like today at all. I've already done most of what I wanted to do, which is be long going into that day. By the way, gang, that's not dissimilar to how I look at earnings. Do I want to sit through earnings? It's a very binary lottery scratch off ticket kind of way of trade. It's not what I want to do. What I'd rather do is play the ramp up into it. There's a psychological event sitting on the calendar, and there's a ramp up usually into that psychology if you can put a watch list together with the right parameters for those stocks that'll behave that way. That's the trick. Take advantage of the psychology going into the event, not the event itself. My 2 cents, okay? XLU has been tough. I'll tell you what. Yeah, let me break down XLU. XLU's been hard. It's been a little fussy. So, you know what? I'm going to talk about how to manage risk. This is really important. Take a look at this chart on AEP. I've got a lot of nice winners this week. So one of the things that people in my position really should do is talk about, well, what do you do when you're wrong, right? But heaven forbid someone sitting here goes, well, sometimes I miss. This was a swing and a miss for me. Literally a swing trade and a miss. But let's talk about what experienced traders do. When you're wrong, you've got a measuring stick and you bail. I took a 25% hit on a premium of a $3, I think $3.10, $3.05. These were right around $3, these options, AEP. AEP had some outages. The stock got hit. And it just really hasn't recovered. Am I still sitting in this? No way. What we do on the options is acknowledge the trend that the trade was in. It was a valid pullback. Absolutely. And then it just kept going. Well, am I going to double down and buy more and all those things? Categorize those actions under things that losing traders do. No, of course not. What do we do instead? We look at how much we paid for the option. We looked at the negative impact on our overall account, make sure that does not exceed 3 to 7%. And then usually my cutoff is right around 25% premium loss. Done. That's it. So I'm not in this anymore. Am I bummed it was a losing trade? Yeah, but I also recognize that names like Duke Energy and Southern are pulling back in similar ways. This looks really good. Southern's a name we've had our eye on, as you can see from my orange lines there. That's working fine. It's actually doing all right. So I think one of the things that we always have to be very, EXC was another one. Duke was another one, by the way. So AEP took it the worst. We didn't put all our eggs in a basket called AEP. We had 4 different things we were looking at, including the overall XLU. And so what I'm trying to say is know from an arithmetic standpoint where your risk of ruin is. I've never blown up an account. And I don't say that because it's something that if you did do it, you should feel bad about. It's because you weren't ever told that when your account is down 50%, stop what you're doing, right? How many of you are drag racing fans? It's my favorite analogy. When you see a drag racer flying down the quarter mile and they get out of the groove, which is that nice spot along the track where the rubber's laid and they've got good traction, when they get out of that groove and they're starting to lose control, they shut it down. They shut the motor down, right? They don't hit the gas pedal. A lot of traders, when things get all sideways, they hit the gas pedal. So I look at it from the standpoint of shut it down. It's okay. It's okay to say, shut it down, move on, see where you still have an edge elsewhere. So keep that in mind. What's the negative impact? Are you down more than 50% in your account? Then you've got to stop what you're doing because mathematically you've got to trade to perfection just to get back up to even, which in the current state of what you're doing is probably pretty unlikely. So think about that risk of ruin. If your account's down 25%, find out what's not going right. If it's down 50%, take a break. You've got to recalibrate to whatever changes the markets are presenting you that you're not seeing. Okay. So I don't mind talking about losses from time to time. I think it's a really key part of what good traders, great traders do. They take losses at levels that they know are not mathematically going to put them in a risk of ruin and that are at points of validity. And I know I've run a little bit longer than I normally do today, but it's Friday. So let's see. It's like a warm up before the race. Neil, I like that. Little neck roll, get your shoulders loose, get your thumbs ready for a morning of trading. Yeah, Friday, don't overdo it. Okay, let's see here. What else do we have? Yeah, but Smook, AEP hit our threshold, right? So if you're in the Sector Secrets Mastery with me, you know the AEP, once it broke the trend and then we hit that threshold, I've got to just take the hit. The nice thing is it's not a $30 option. It was a $3 option that we might have scaled into, but it should, these positions should not be anything more than maybe a paper cut, right? That's the trick. Having numerous positions on, not putting all your eggs in one basket, being reasonable about the cost of options. I seldom trade options north of $10. You don't have to. And they're much more scalable. You can play a whole lot more. How many folks play $30, $40, $50 options? And that's the only symbol you can play because most of your capital is tied up in that. You can't even scale in and scale out all that much because of the cost prohibitive nature. I'm a big fan of sub $10 options, and ETFs offer a lot of that. So I'm a big fan of that. I'm a huge fan of that. Right now, we have some relative outperformers in the XLU. I may think about putting some skin in the game in XLU, but I'm far more interested in managing positions in EXC and SO, right? Just as a way to show you both sides of the trading. All right, so Microsoft rocked yesterday. Scott, yeah, that was a really good trade for us. That was just a day trade. Okay, so let me call. Yeah, it's 9:26. So sorry, I ran over a little bit today. Got a little bit of a late start. Thanks as always, gang, for joining me here for our pre-market show. Thanks for the time. We're here every day, Monday through Friday, 9 to 9:20. And I appreciate the time. Have a great weekend, and I'll see you on Monday. All right, gang. Be good to each other. Enjoy your weekend, and I'll see you 9 a.m. Monday.